Welcome back. You're watching India Market Open. All right, while markets are in a narrow range, there's a lot of action globally as well. And one of those things is that the Big Beautiful Bill has now become a Big Beautiful Act. What does it mean specifically for Indian corporates and Indian companies? So Amit Sarkar joining us for more.
Well, yes, multiple companies either stand to benefit or stand to lose out of this big, beautiful act which has been implemented now. Firstly, on remittance tax, if you look at, NRIs will have to pay 1% more to send money to India from the 1st of January 2026. Now, this will lead to higher cost for those who are staying there, the H-1B visa holders and non-citizen US residents and professionals and green card holders as well. Now, this could lead to some increased cost for IT companies because they have employed a lot of people, a lot of Indians in that country and which are remitting money. So that could lead to some cost increase for IT companies like Infosys, TCS and Wipro. But on the positive side, they have also said that this remittance tax will not be applicable to Indian companies or investors who are transferring gains from US to India. So on that front, it is positive for IT companies and pharma companies which have operations or subsidiaries in US. And now apart from that, if you look at the corporate tax provisions and incentives, now they have retained the US corporate tax rate at around 21%, which is positive for Tata Group because they have multiple companies set up there, Reliance Industries as well, and Dr. Reddy and other pharma companies which have operations or subsidiaries or companies in the US. Now, apart from that, they are also saying that it will also allow full and immediate deduction for the R&D cost that has been incurred for equipments, machineries. In short, the capital expenditure that they are incurring will be allowed as full deduction in that year itself, which again is positive for Indian companies which have operations or companies like like Infosys, HCL Tech, Sun Pharma, Dr. Reddy, Aurobindo Pharma as well. There are multiple companies that stand to benefit out of this. Then there is the removal of double taxation, which could again benefit Indian multinational companies which have operations there. And also there is this will also benefit auto sector companies, given the fact that they're looking at the manufacturing cost which could come down for auto companies because of this R&D deduction that they will be allowing. So Tata Motors could also stand to benefit out of this. So that is another company that stands to benefit. Now, if you remove IT and pharma, then also there are multiple companies that stand to benefit. Firstly is the renewable power firms. Now, earlier the expectation was that there won't be more tax credits given to green energy. But then right now, what the government has said that tax credits will continue till 2031. So that is one benefit. Then one positive news that has come out of this, and Waaree Energies and Premier Energies stand to benefit out of this because Waaree Energies nearly 57% of the order book is from the US market, and for Premier Energies at this point of time, just 1% of the order book comes in from the US market, but they have plans to grow their export order book and have more orders coming in from the US market. In fact, they had recently also done an acquisition in the US market, so they also stand to benefit out of this. But over the longer period of time, that is beyond 2031, they could stand to lose out, that is Waaree Energies and Premier Energies. Now, apart from that, when it comes to auto firms, there is some relief on taxes for car loans which has been given, which could stimulate the car demand in the US market, and Tata Motors could stand to benefit out of this because this is quite positive coming in for Tata Motors, and there could be potential benefit to Indian auto ancillary companies as well, that is Bharat Forge, Motherson Sumi, Sona Comstar and Ramkrishna Forging, because all these companies have a significant exposure. Around 20 to 40% of their business comes from the Northern America market or the US market. Now, what are the potential challenges that have been highlighted here? Firstly, there is stricter compliance for money transfer for companies. Then there is reporting of transfer over $5,000, which is becoming mandatory from right now. And this could lead to delay and additional scrutiny for cross-border financial transactions. And going forward, they're also saying that this could also lead to increase in import cost, and Indian companies rely a lot of it, and hence that could also be negative for the Indian companies here. And lastly, they are saying that 3 to 4.1 trillion increase in US deficit could also lead to raise in interest rate taxes and could also impact the global capital flows going forward. However, on the positive side, India, they are also US has specifically mentioned that they will reduce reliance on China going forward. This could indirectly benefit India, given the fact that India could become an alternative manufacturing supply chain hub. So that is one thing positive coming in for India out of the Big Beautiful Act, which has now been implemented.
So, Amit, thanks for that. That's a complete synopsis, and let's get